Hey guys, Chris from Adaptation here. So today is March 17th. This is another day of the COVID lockdown. Well, maybe lockdown is the wrong word, but we have no school. But we may still have exams coming up in May, June, so we don't want to waste any time. So this is another short video. So in this video, what I'm going to be showing today is the solution to question 1 from the Jan 2020 exam for PoA Paper 2. All right. So sorry. Right, so it says suggest one reason why a trial balance must always be in balance. So as we know, a trial balance is a list of all the accounts in the ledger that have balances. And as we know, every transaction has a debit and a credit entry. And the value of the debits must be equal to the value of the credits. So that was actually my answer. One reason why a trial balance must always be in balance is that for every transaction, the value of the debit entries must be equal to the value of the credit entries. If anybody knows any other reasons why a trial balance must always balance, please feel free to share them or those reasons in the comments below. All right. Part 2, identify 2 errors that are not revealed by a trial balance. So we have 2 sets of errors that don't affect the agreement of the trial balance, for which they're asking for 2 here, and errors that do affect the agreement of the trial balance. So we won't worry with that set for now. But the errors that do not affect the agreement of the trial balance or not revealed by a trial balance are errors that would cause it not to be out of balance. So those are errors of omission. That's where you completely forget to enter a transaction. So you have no debit, no credit for that transaction. So neither side is affected. Error of commission. That's where you debit the wrong person's account. So the debit and the credit is done correctly. It just goes to the wrong person's account. Right? Errors of principal. Now, this is where the wrong class of account is debited. So what I mean by class, a lot of times when people, a common one is where you pay for motor expenses. And we know when we pay expenses, we debit the expense account. But sometimes they debit the asset account. So they'll debit motor vehicle instead of motor expenses. So that's the wrong class of account and an error of principal. Then you have errors of original entry. So this is where the figure that was used for double entry is wrong. But it's wrong on both sides. So you have the same error on both sides, so it balances off. Errors of transposition. Now this annoys me because an error of transposition is an error where the digits are wrong in the double entry. So let's say instead of 234, you have 243. And to me, that's an error of original entry. The only little thing that is kind of interesting about an error of transposition as opposed to an error of original entry is that with an error of transposition, the difference between the correct figure and the incorrect figure is always divisible by 9. That's a nice little piece of maths there for you guys. All right. Compensating errors is where you have an error on the debit side that is equal to another error on the credit side, and they don't have to be related, right? So for example, you may have too much, the balance in the sales account may be too high, so your credit is too high by, let's say, $100, and you may also have an error in the purchases account that is too high by 100, and that's a debit balance. And then you have complete reversal of entries. So this is where the account that was supposed to be debited was credited instead. And the account that was supposed to be credited was debited instead. So in that case, there's still a debit and there's still a credit for the correct amount, just in the wrong accounts, but it still balances off. All right. So I know they asked for 2, but I'm giving all 7. 1, 2, 3, 4, 5, 6, 6. I think that's what we said. 1, 2, 3, 4, 5, 6, 7. Ooh, I can't count, boy. Pressure any dimes. All right, so if anybody knows any other types or any other names for those errors, sound off in the comments below. All right, so what I want to show here now is the next part of the question. So the following balances were taken from the books of Henry's Pizza at the beginning and end of 2019. So you have Jan 1, 2019 here as the beginning and 31st December 2019. That's obviously the end. So we have bank, cash, machinery, accounts receivable, loan, equipment, accounts payable, inventory. So there's no rhyme or reason to the order here. We have the first 4 items are assets, the 5th is a liability, the 6th is an asset, 7th is a liability, 8th is an asset. And what do they want? Using the information on page 4, answer the following questions. So calculate capital at start and at end. Okay, so let me go back up here. So what I'm going to do now, you don't have to write up anything here. I'm just going to strip across to my solution. So what I will say is that to calculate capital, of course, that's from day 1 in accounting, or at least day 2. Capital is equal to assets minus liabilities. So I basically took this entire list here, left it in order. I didn't rearrange anything. But my loan and my accounts payable, those two items are liabilities. So I showed those items as negative figures, right? So you'll see them here. So I'll just put that there. Okay, cool. I don't know why both of them enter, but all right, cool. So we have, once again, the list here and the list here. If you want, you could pause, you could go back and then double check to make sure the figures are the same. And all we have to do is have a total there and a total there. Oops, press the wrong button. Right, so what do you notice about the capital balance at start relative to the balance at end? Which one is bigger? The one at start, 47,000 and a little bit, versus about 40,500 and a little bit more. So what could cause capital to decrease? So either the owner takes out capital or you make a loss. Remember, people get into business to make a profit. And when you make profit, the owner gets more money, and that goes to the credit of the capital account. If the owner makes credits to capital increase the balance in the capital account. But of course, if you make a loss, that's going to go on the debit side of the capital account, which is going to cause it to decrease. So this follows on to the next question. Calculate the net profit or loss for the year. So let me just show you that that's what they asked for here. What is the net profit or loss for the year? So what we will do is we will simply compare these two figures and state that, right? So the capital at the end was 40,550, capital at start was 47,025, and you just subtract. You find the difference, and that is the loss for the year. So once again, that's because if capital decreases, the owner invests capital to make a profit. When the owner makes profit, that profit goes to the owner. It will increase the owner's investment or the owner's worth, which means capital increases. If, however, the business makes a loss, the owner has to absorb that loss. In other words, the owner's resources are absorbed to pay for those losses. Okay. Total value of non-current assets at year end. So non-current assets would be the machinery and the equipment. So those are the long-lasting assets, which we expect to last for longer than 1 year. All right, so what I'll do is I'll just show you machinery, and I said at the end of the year, so that's 23.3 and 10.6, which will give us 33,900. So it's a simple total they were looking for. From here now, how would the inventory at the 31st December 2019 be classified on the statement of financial position? So inventory is stock, and it would be classified as a current asset. All right, inventory is a current asset. Calculate the which item is a current liability? Well, we only had one current liability, which was the accounts payable. And calculation of working capital. Now, working capital, as it's otherwise known, net working capital, is the difference between current assets and current liabilities. So that's at the start, right? So current assets, bank and cash, receivables, inventory. So we're going to add those together and then subtract accounts payable. We're not going to subtract the loan because, unless otherwise stated, we assume loans are for more than 1 year. So therefore, non-current. So let's go. So we had the inventory, stock, debtors, bank, cash. There's no particular order in which you have to state it. It's just a calculation of working capital. It's not a financial statement. Hence, there's no one correct order. I just use that order because that's the order in which those things usually appear in the balance sheet. We subtract the accounts payable and we total up. So 14,925 is the working capital. Let's go back to the question paper. All right. Yeah, so I'm sorry if I'm jumping between the question and answer a bit too quickly. I'm just trying to keep the video as short as possible. You guys could pause. You guys could even slow it down if you want to. All right. In the table in B on page 4, account titles 1, 2, and 8 are current assets. List the names of the current assets in order of liquidity. So liquidity is the ease of conversion of an asset to cash. Hence, cash is the most liquid asset. And by the way, the order I showed you here is in reverse order of liquidity. So order of liquidity would start with cash and then go up from there. So let's so they said, hold on, they said items 1, 2, and 8. Let's go back up and check out items 1, 2, and 8. So bank and cash and inventory. So cash first, then bank, and then inventory. Cash, bank, and AR. Well, AR, wait, hold on. They said 1, 2, and 8, right? Oh, okay. I used 4. All right, so inventory, right? part 8. So if you guys, just by the way, I don't think they teach that the Roman numerals again in school. So I have kids telling me A part I, A part II, IV, and V. Anyhow, it's not a math class to teach Roman numerals right now. We're just trying to do some accounts. All right. But the V is 5 and the I's are 1. So 5 and 2 is 7, 5 and 3 is 8. Anyhow, what term describes a reduction in the value of equipment? That's depreciation. All right, IX, the X is at 10. If you put a number in front of the 10, you have to minus this, the first number. So 1 from 10 will give us 9. What are they asking for? 9. Let's take a look. How much money is owing to the firm at the end of the year? Well, owing to the firm means receivables, right? Well, let's go back up to that page to check that table to see if there's anything else. Bank, cash, machinery, loan, equipment, paper. No, so this. So just $1,000, right? And then X is part 10. What are they asking for in part 10? Let's take a look. Let's go again. What term is used to describe the business if it can pay its liabilities as and when due? Right, so that one I use two is liquid or solvent. So I know I said liquidity is the ease of conversion of an asset to cash, but it also means how able the business is to pay off its current liabilities with its current assets. And solvency talks about, well, how able the business is to service its debt or its long-term liabilities. So to me, I find the question was a little bit vague because it just said its liabilities. So one might assume all liabilities. That might be the safer assumption. So in that case, I think solvent, which comes from the word solvency, would be the better word to use, the better option, the better choice in this particular case. But I think if you put liquidity, they might give you at least a half mark because you had the concept or the idea of what they wanted you to know. Okay, all right, guys. So that was the entire question 1 for Jan 2020 PoA paper 2. I'm hoping to be able to put up question 2 later today. That's a cash book, so it's going to spread across a bit more, and I don't want to keep shifting between the question and answer for every single transaction. But if I have to do that, I have to do that. But I'll see what I could do. But I have 3 classes between now and then. 3? Yeah, so if it doesn't happen later today, you guys will see it tomorrow. Anyway, guys, thanks for watching. Stay safe with this COVID-19 situation, guys. And remember, keep practicing. I have more videos up on my on the same YouTube page. I have answers to past papers for maths, accounts, and add maths on my Facebook page. I'll try to put that link in the description below, but just go on Facebook and look for Adapt Tuition or your Different Approach Tuition Limited. You should find it. Sorry, 1 second. I have to. Sorry. Right, my bad. Okay, yeah, and if anybody has any questions, please feel free to leave them in the comment section below. I will try to put out, like I said, more short form videos as the days go by so that we have information to use and explanations to go with it. If anybody has any suggestions or requests, please let me know. And I put up something on Instagram recently about what I plan to do with my class between now and when school opens in Trinidad, which is stock valuation, employees pay and ratios. All right, so I do have a PayPal account that we can use if anybody wants to join the class. I'm working on a pricing because I'm trying to be mindful that people, of course, mightn't be working on these things. So just message me. You can message me here. You can message me on Facebook, on Instagram, and we'll work out something. All right, guys, stay safe.